Welcome back, guys. Today's going to be a great video because we're going to talk about how to get optimal entries in the market, how to get the most minimal drawdown you possibly can, as well as let your trades run to your take profit without worrying about the market pulling back on you. So we're going to look at that, how to get that, and with that said, let's get straight to it. So to get optimal entries, you first need to understand something about structure and how it works. So let's take a downtrend, right? Because our first example will be a downtrend. So obviously a downtrend looks something like this. We have this, we have a pullback, and then we have a leg down, and then we have a pullback, and then we have a leg down, right? And these are your pullbacks, or known as your lower highs, one here and one here, right? So these are your lower highs. You want to be taking the move somewhere around here, right? This is where you want to be catching the move. If you're trying to catch the move down here, you have to look at, all right, the price has already moved a decent part. How much more of that move can I get before there's the possibility of price trying to pull back on me? And this also comes into counter trend trading, because look, on a downtrend, your down legs are going to be a lot bigger than your pullback. So that's why you want to trend trade, is because you get the biggest move and the most probability of the market not ending up coming and pulling back on you, right? So the issue is if you're trying to take a trade somewhere around here after seeing the market move, and you put in a short position here, and you're taking it here trying to catch that, and your take profit is, let's say, somewhere here, and then on the lower time frames, you know, you're something like this, right? So what happens is that you're taking the move way too late, that you're going to come into profit and not hit your take profit yet, right? And then it's going to pull back on you, and you're going to be in drawdown here, right? And you'll have to wait for all of this drawdown before it actually comes in profit. And by then you'd probably, use some risk management and be closing half. So it's not ideal, and you need to understand that you want to catch the momentum move, right? So ideally you want to be in a trade somewhere here where you catch that downwards momentum, price pulls back, your entry is here, then it just continues down, minimal drawdown here on a candle close, maybe just, and then it comes down. And then that way, this is your optimal entry, and this is how you're gonna reduce your drawdown as much as possible, as well as get those trades running, to your take profit. The same goes for an uptrend, of course. This is a downtrend, so the same would work for an uptrend, right? So let's go see an example here. So obviously we can see here that the price has pulled back, is in a downtrend here, and it's in a heavy downtrend, right? So after this move here, we could look for, on the smaller time frames, remember we're on a 30-minute here, for a small pullback to be able to enter. But entering on the break of here, there's no possible entry that we could have entered, and the momentum move is already made. Like, if you guys were to look to enter, let's say we were to enter on market structure, because you either enter on two things when structure is made to continue on a downtrend. So in our example here, right, when we have that pullback, we can enter to go down, or when you're breaking structure itself, right? So this is in the smaller time frames, a small uptrend, but in the whole big scheme of things, it's a downtrend. So we could enter when it breaks structure. So that is a break of structure right here, right? Or we can enter all the way up here if we know what we're doing to get even a better, longer run. And I'm going to show you how that works, especially on moves like this. So let's go take this example here. On the break of structure here, first of all, there's no entry except for impulsive entries, but you have to look at the move that the price has made. It's already dropped 37 pips. So there's a possibility here that once reaching this area, we could have a pullback, right? Price could pull back easily all the way to here, and you would be in drawdown because of the move it's made, right? If it was to do something like this, then break, and the candle was to break here like this, that would be a different story, right? So if we were to have something like that, of course it would be a different story, just to draw it more clear. If we were to have price come up here, then break down here like this, and you enter here, it's fine, because that's a small move compared to something like this. So let's play this and see what we were looking for, right? So if we play this here, speed it up a bit, we can see what did price do. Price made, there we go. So you can see obviously what happened, right? So price made here a resistance, right? On a downtrend, right? It came up now and it made a resistance, and we can see that resistance is here. And that's how that resistance was formed, is because on a lower time frame, these are higher highs and higher lows. And now that we see it closing bearish and we're on a downtrend, like what I drew down here, we can expect that impulsive move to come down and fill this range here after creating a pullback. Because if we're wrong from the beginning, right? That's just a bad trade, and we won't have to worry about price pulling back into us, because if it does want to continue the downtrend, it will continue the downtrend where we are now. So if we were to take a position on the break of this wick, because on a lower time frame, this wick here is a resistance, right? On a lower time frame, this is a support, right? So when we take a trade on the break of that, it can ensure us that, all right, we're breaking structure to the downside. And that obviously will be when we want to enter. So if we were to enter something like this and enter as price breaks that wick, you can see when price broke that wick, that's when we got the impulsive move, right? That's when we got that strong move to the downside without drawdown. And even breaking the wick, if you were to enter on the candle close, you were to experience this drawdown, and price could easily just make a small stall before pushing up, breaking this wick and continuing structure to the upside. On a 5-minute time frame, this could have been just a pullback to make another higher low, continuing up to the upside, because again, we could have pulled back all the way to here, no problem. But if you're breaking structure here and catching the impulsive move, that is where you're going to get the minimal drawdown to go down and fill the area that you're trying to trade and make a good trade. So we're going to have another look at an example here on gold, and I'm going to show you an opposite in an uptrend, but breaking structure, not catching these higher lows. So let's switch over to that. So guys, here's your example on gold. So on gold, we have an uptrend here, right? It's clear to see an uptrend, you know, but this is a different type of entry that you want to look for. So on an uptrend like this, you have an impulse, a pullback, right? And an impulse, a pullback right here, and then an impulse, right? So same on the downtrend, you know, now we're in an uptrend, we have higher highs and higher lows, higher highs and higher lows. But now instead of, we want to start taking the trades, you know, if the legs are big on the uptrend, which they should be, you can see that the pullbacks, the legs are longer, pullback legs are longer. You want to be taking the trade either from here, if it makes sense, or you want to be catching just when structure is broken and catching the impulsive move after structure gets broken. Because not all of the time are you going to catch a trade in this area. It's actually most of the time you're going to catch trades breaking structure. So let me show you how that works, and let's go into this example here, right? So we can see here what we did on a higher time frame. This is a clean pullback here. Obviously we don't want to take the break of structure as soon as price broke this area here. We don't want to take, because there's a resistance right next to that. So this is essentially the range you have. This is not enough range. Okay, so since this is not enough range, this is not where we want to take the trade. But to save time in this video, back here we have a clean range here, right? So we have some candles just coming down here for an easy range to be able to be filled. So we know, okay, if price were to close above this area here, it would be breaking structure, right? And it would be something like this, where structure has now been broken and you can expect the impulse to the upside, right? Same when structure was broken at this area here by this candle, it filled that range. So now if I go play, and we can see and wait for that structure to be broken, and there, that's the candle that broke the structure, this one here, because it's closing above. But we don't want to take the trade now, because we could easily pull back into here before breaking any more structure. So we drop down to the lower time frame, and we can see what we have done here is, like on the lower time frame, we've closed above this structure, and now we're creating the pullback. So if you were to take the trade off the close, you have to wait through this pullback now, right? And your stop loss won't be tight. And now you're waiting through this pullback and you're not getting your optimal entry. And you can see now you have to wait for this pullback. So what we want to look for is, we want to look for either a break of this high, which is right here, which on the lower time frame is all that's doing on the lower time frame is that's making in an uptrend. So here's your impulse. So this is what you have to keep in mind, guys, is look, the price moved already 49 pips to get to this area. You can expect a pullback, right? But once that pullback has happened, you can then expect price to have a shooting or an explosive move to the upside, minimizing your drawdown, and that's what you want to wait for, right? So you can see that price came here, made that move, and now all it's doing is making a pullback here to continue up because it's broken structure on the higher time frames. And your entry wants to be as soon as it breaks above that area, because now you're going to minimize drawdown and you're going to be in the best position to catch that move. So on the lower time frames, so on the 15 minutes, it just looks like a red candle here, and as soon as structure is broken on a lower time frame, which would be breaking that high, which now I can go show you on the 5 minute. So if we look at the 5 minute, what is this, guys? Here's your pullback and here's your leg, right? Uptrend, we're in uptrend, and we've broken structure confirmed by the 1 hour close. Now we're getting a your pullback, sorry. So now you're getting your pullback after, and you see it's broken structure here. So now we can expect, okay, as soon as this high here is broken, it's going to break structure. So you can see that's the structural break, and that's when you're going to get that explosive move to the upside. And what ends up happening here is you can see that if we go on the 15-minute time frame here, and it's the same thing, right? I'm just showing you the lower time frame structure is just another pullback, right? So just another higher low, and we were to take a long position on the break of this area here, and just remove, I'm in drawing mode, need to get off drawing mode. So yeah, and then, you know, target, let's say somewhere at 20 pips, that's a pretty good, and then your stop loss will be, you know, around 13 pips or something. I'm not sure how much this pulls back, but as soon as it's finished its pullback, and then, you know, target something up here at 20 pips, which is, you know, a good trade, and we see what happens. All right, we close and see, look, we shot through, smashing the take profit, right? And that's when you got that explosive movement, is when you broke that structure on the lower time frames, right? And we can even watch that on a 5 minute, and you can see here on the 5 minute, if we were to look at that, so here's your move, breaking that's your stop loss below here, breaking the structure. Your entry on the 5 minute would have been actually up here. So that's why sometimes it's good to use, but you could, you know, structure is technically broken right here, and then, you know, your take profit, and you can see that price, you know, goes up, okay, then makes a pullback, fair enough, but you would have taken your profits here, right? And you're not in drawdown. At no point in this trade was I in drawdown. There was no drawdown here. It was when you got that impulse of the move, and that's what you guys need to start doing to start getting these you know, these more, you know, perfect entries. To be honest, nothing's perfect. You will experience drawdown sometimes, but it's using the knowledge and the skill you have of the market and market structure and candles to be able to know when that momentum is going to come. There's a lot more to it about momentum, timing, about other factors as well, which, you know, I really need to go in depth, and it will take a long time for that. But this is like the fundamentals, and this is some, you know, great information. So, you know, if you have made it this far, thank you for joining. Thank you for watching this video. I really hope this helps you. I think this is something that might change your trading quite drastically if you start applying. Please leave a comment below of what you would like me to see, or even if you enjoyed this video, feel free to subscribe if you haven't already, because, you know, it supports the channel. I love growing a community. It's really fun. I enjoy you guys. So yeah, smash those comments. I love to reply. I'll reply, ask questions, do what you want. It's up to you. So with that being said, you know, take care, trade sharp, and until next time, peace.